I'm going to share my screen here. All right, so y'all should be seeing my beautiful Google Slides, right? All right, so as always, this information is accurate as of today. Things could change. I think there are like 2 bills that either have just been proposed or are about to be proposed that include retroactive tax law changes that would be retroactive back to January 1st, 2023. So if y'all are in a hurry to start doing taxes, you might want to press pause for a minute. There might be some tax law changes coming. So again, this is accurate as of today, but anything can happen. So we're in our ABCs of taxes and accounting series. We're on H. H is for health insurance, and it's just a write-off, right? Company pays it out of the company account. You write it off as insurance, done and done. Psych, that's not how that works. Of course not. So this is just a quick recap, and then we're going to go into each entity type. So health insurance is treated differently for each entity type. If it's a sole proprietor or a single member LLC, it's not deductible as a business expense. So it shouldn't be on the P&L, and if it is, you're going to ignore that when you're preparing the Schedule C. For S corporations, it's deductible as wages, which makes 0 sense, but there you have it. We're going to go into why that is the case. Partnerships, it's deductible as guaranteed payments. Duet, we're going to talk about that too. C corporations are the only ones that make sense. C corporation shareholders are treated like any other employee. Their health insurance is treated like any other employee benefit. It's a beautiful thing. I don't know why they can't all work like C corporations. I'm sure there are technical tax reasons that my little pea brain can't wrap my head around. So let's explore. This one is fairly simple. Sole proprietors and single member LLCs, they file a Schedule C. The business owner can pay the premiums out of their business account, or they can pay them out of their personal account. But if they pay them through the business account, it's not a deductible expense on the P&L. So on the bookkeeping side, I have two recommendations. You can really do what you want, but I recommend that you either, if you're going to have them on the P&L as an expense, you should have a section toward the bottom, like an other expense type called non-deductible expenses, and then have the health insurance be a sub-account to that. It very clearly identifies it separately from any other insurance, like liability insurance, workers' comp insurance, whatever other kind, vehicle insurance, whatever other kind of insurance that business might be paying. You want to separate it from that so it doesn't accidentally get deducted as health insurance in a lump sum. So I generally recommend that you either make it a sub-account to non-deductible expenses on the P&L, and I make it an other expense type so it moves it all the way to the bottom of the P&L and just makes it very clear. Or you can make it a sub-account to distributions. I still recommend you make it a sub-account. You still want it very clearly identified so that the tax professional knows to pick it up in the proper place on the tax return. So either sub-account to non-deductible expenses or on the balance sheet as a sub-account to distributions. Either way, either method works. And then the individual is going to take the self-employed health insurance deduction on their tax return. They get that above the line deduction for whatever that amount is. Fairly simple, right? You just really want to make sure that you're not picking it up as an insurance expense on the Schedule C, because that's not where it belongs. Any questions about how to treat the sole proprietor or single member LLC? I feel like we've all probably seen a whole bunch of those, and that makes sense. Where I get lost in the sauce is when we get to S corporations, because this mess makes no sense to me. But here we go. I generally recommend that our S corporation owners do pay their health insurance premiums out of their business account. That way we make sure we don't miss it. If they're paying some from the personal and some from the business, it just gets really wonky to track. And then we risk making mistakes either on the K-1s, on the W-2s, on the tax return. So we generally recommend that our S corporation shareholders do pay the health insurance premiums out of the business account. But where do they get recorded? They are actually, for an S corporation, considered wages. So health insurance premiums paid on behalf of a greater than 2% shareholder for an S corporation, it's taxable income to them. And so it gets added to their W-2 in box 1, but not boxes 3 and 5. So it's subject to federal withholding, right? But it's not subject to Social Security or Medicare. And then it gets reported in box 14, which is just an information only box. So because it gets included on the W-2, I generally recommend in the books that you record it as a sub-account to wages. So I'm a little bit particular about how I record payroll in my clients' books and in my own books. My business is an S corporation. So I have my payroll expenses. I have a sub-account called officers' wages, and then I have a sub-account to that called officers' medical. I like to have it clearly detailed because then I can very easily tie back to the W-2. So when Gusto at the end of the year is saying, hey, the draft W-2 is ready, please check it, it's very easy for me to pull up my P&L, match it to my W-2, and I know that no adjustment is needed. That also keeps it in the proper section of the P&L. So instead of showing up on the P&L as health insurance and in an insurance expense, it shows up in the payroll section as wages. Again, that's to tie it back to the W-2. So gets added to the paychecks. Now, you can do this a couple of different ways. If you have a business owner who communicates well, you can add it at the beginning of the year in their payroll account so that it's addressing each paycheck's share of the medical premiums as you go throughout the year. That's my preferred method. You can also do a year-end adjustment where you're making an adjustment for the whole year for all of the premiums paid for that year. That's fine if you have a good task system to remember to make that adjustment. Because if you miss it, you're going to have to amend the W-2, you're going to have to amend payroll reports. I prefer to be able to address it throughout the year, although that's not always possible. But either way, you want to make sure it gets into the payroll system so that it shows up on the W-2 as box 1 wages, and then box 14, which is an information-only box, it should identify S Corp Medical. All right, so it gets deducted by the S corporation as wages. It gets added to the individual's income tax return as wages. So that's really a wash, right? Higher W-2, lower K-1, nets to zero. And then they take the self-employed health insurance deduction. Anyone else think that's just crazy? Wouldn't it just be simpler to say they can just deduct it as an employee benefit? Like deduct the employer share on the P&L and have it hit the K1 and that's it? I just think it's absolutely bonkers. So I'm just going to go over that one more time. It gets added to the W-2 as box 1 wages. So it's deducted on the P&L as wages, which reduces the K1 net income, right? So reduced K1, but increased W-2, that nets to zero. And then they take the above the line self-employed health insurance deduction for whatever was the amount of those premiums. So here's just an example of what the W-2 should look like if it worked correctly. Can everyone see this? Or this S Corp medical box is really small. Hopefully you can see it. So if you want to sit down and do the math to take box 3 minus box 12, whatever, you'll just have to trust me that the math is right. But it gets added to box 1, and then it shows up in box 14 as a separately stated item. This I should be able to tie back to the P&L. I should be able to tie to the K1. And then I also know how much to deduct for the self-employed health insurance. Pilson asked, are you not allowed to deduct it if it's not on the W-2? Technically, no. Now, in practice, let's just say they didn't make the W-2 adjustment. It's also not deducted on the S Corp return. Could they still pick up the self-employed health insurance deduction? I don't see why not. The net result is the same, right? If they did not deduct it on the S Corp return, so the K1 is that higher amount, but the W-2 is a lower amount, right? Then if they took the self-employed health insurance deduction, you're at the same place as if they had done it correctly. But again, that's not the correct way. So you do run the risk of that getting picked up, that it wasn't treated correctly. But at the end of the day, the tax liability is going to be the same. So I think it's probably not the end of the world, but I wouldn't generally recommend doing that for more than 1 year because, right, our job is to help make sure they do it right. We shouldn't be reporting incorrect items on the tax return. Nishan asked, how do you book the payment for health insurance paid by the business? In the books, I record it as a sub-account to officers' wages. So when that payroll journal entry comes over, it's going to hit the sub-account to officers' wages. Now, when you actually make the payment, you could end up having to set up like a liability account, right? So that payment to the health insurance company is going to hit like health insurance payable. And then the payroll journal entry is going to have a health insurance payable and the wages. So you're going to have an expense and a liability, which net to zero on the payroll journal entry. And then you'll actually pay the premium out of that health insurance payable account. That way you don't duplicate the expense. That was a great question. Any questions on what the W-2 should look like? How it's treated on the S-Corp return? All right. The next fun one is partnerships. So partners of partnerships don't get W-2s. So how are their health insurance premiums treated? I still recommend that the company pays the health insurance premiums out of the business account. They don't necessarily have to, but if they're not, you have to make sure you're getting that information from the client. If you're doing the bookkeeping as well, you're going to have to make sure you're getting that information. The medical insurance premiums paid on behalf of the partners are added to the partners' K-1s as guaranteed payments. Because remember, it's taxable income, and guaranteed payments are taxable income. So it gets added to box 4 as a guaranteed payment. It'll also flow to box 13 on the K1, which is the other deductions box. But the most important part is that it shows up in box 4. That's going to get picked up on the personal return as guaranteed payments. So you have the deductible expense on the partnership, right? It gets deducted on the books and taxes as a guaranteed payment. It gets picked up on the K1 as taxable guaranteed payments. So that's a wash. Lower K1 net income plus the guaranteed payments. And then they take the self-employed health insurance deduction. So the overall treatment is very similar to S corporations. It's just the forms that it gets reported on are a little bit different. Instead of a W-2, it gets reported as guaranteed payment on the K1. So this is just an excerpt of the top of the K1. So you're going to want to make sure that those health insurance premiums show up in box 4A, guaranteed payments for services. Again, it'll also flow to box 13 if it's entered correctly in your software, but box 4A is the important one.
If it flows through as a guaranteed payment, will it be subject to self-employment taxes?
Mm-hmm. It's taxable.
So the S-Corp doesn't pay FICA taxes on the health insurance premiums paid by...
Actually, you know what? That's a good question. I have to double check that. I can't remember off the top of my head. So let me circle back with you on that. And if anybody else has that answer, you can shout it out. I'll circle back to that.
Thank you.
All right. So in the books, I generally have guaranteed payments and then a sub-account for partners' health insurance. And if there are multiple partners, you may want to have a sub-account for each partner. That way you can very clearly see what's supposed to go to the K1. So on the P&L, guaranteed payments, sub-account for partners' health insurance premiums. Then on the tax return, it's box 4A guaranteed payments. And on the personal return, you'll have the self-employed health insurance deduction. So this one is a little bit easier because there's no adjustment that needs to be made in payroll in time for the W-2s to roll out. So partnerships you've got a little more time to make the book and tax corrections, right? You just have to have it right by the time that you are preparing the tax return. S Corp is really important. You have to have it done in time for the W-2 to be issued. So you're on a tighter timeline with S Corporation. Robin asked, do you include health insurance premium paid for S Corp owner's family as well? I was trying to research that question while I was preparing for this. My initial answer is no. But I will get back to you on that. Okay. C corporations, the business owners should pay premiums from the business account. The medical insurance premiums are deducted as business expenses. Voila. C corporations are beautiful. Sydney put in the chat, my understanding is that S Corp owners have to purchase health insurance personally as it cannot be paid by the company. You can get health insurance plans through the company. You can get group health insurance. I know there are rules and it may vary by state as far as like the number of employees that you have to get a group health policy. And this is one of those, like, I'm going to tell you what we do, may or may not be right, may or may not be how you handle things. Oops, let me stop sharing this real quick. My computer is being bonkers. But even if it's a personal policy, we still have our S Corp shareholders pay it out of their business account because we want to make sure we capture it so we can get the adjustments on the W-2. If they're paying it out of their personal account, you have to rely on them to be communicating that information to you. And if you are doing the bookkeeping and or helping them with their payroll adjustments, it's just harder to get the information. So we generally tell our S Corp shareholders to pay it out of the company account, even if it's a personally owned policy. So I realize that may not be 100% correct. You can slap me on the hand if you'd like.